But let's return to the markets. Joining us now is Himanshu Srivastava, the Senior Research Analyst at Morningstar Advisors. Good afternoon, Himanshu. Thanks for joining us here on Markets at Lunch. You know, if I look at the trends beginning, let's say, from October last year, so in October, November, December, and in fact even in January 2017, good afternoon, we saw FIIs as net sellers, but that reversed in February and March of this year. We saw FIIs being net buyers. What has changed, since October to February?
What has changed? Actually, there has been a really contrasting, nature of what we are seeing in the current scenario. In hello?
We can hear you, Himanshu. Go ahead.
Okay. So, what are we seeing now is a very contrasting nature or the scenario that we have seen in October, November, and December, and what we are seeing now. In October, November, and December, that was a period which was full of uncertainty and a lot of surprises. So there was a unexpected U.S. president-elect. Then U.S. Fed hiked rates after a long hiatus, and as a result, the bond yields in the U.S. shot up dramatically, which provided a good investment opportunities for investors. And that is where we have seen a lot of money flowing out of emerging markets, including India, into the U.S. Markets. But now what has happened in the last 2 months, that is February and this month in March, a lot of these uncertainties have been answered. So, by now we know that how the U.S. president, his presidency would be. We have seen 2 rate hikes by the U.S. Fed, and we expect another couple of rate hikes coming this year. On the domestic front, the impact of demonetization was lower than what was expected, which in fact helped FIIs to regain a lot of confidence on the Indian markets again. In the union budget, FIIs got a clarity on the taxation part, capital gain taxation and direct transfer taxation, wherein the category 1 and category 2 of FIIs were exempt from indirect tax, that they don't have to pay anymore. And obviously the last, what we have seen, the elections in the 5 states, they have actually gave a lot of conviction to FPIs on the government, and now what they expect is that the government is in a better position to implement the economic reforms and come out with economic growth roadmap, which will help India to grow and get them a long-term investment opportunity in India.
That's right, investors always like certainty, and that's what they seem to be getting from February onwards, where there's the Fed rate hike trajectory that is expected, the UP elections and the budget clarifications. So Himanshu, also tell us, what are the trends you spotted so far this year with regards to the India-focused offshore funds and ETFs?
They are broadly following the same trend that FIIs have been following. We have seen a lot of inflow coming in the month of Jan and Feb. They are somewhere around 700 million USD that we had, that foreign offshore India focused funds have received in the first 2 months. We expect this figure to be even higher in the month of March. Although the figures are not out, as per our estimate, it should be somewhere around 800 million USD, which will be higher than Jan and Feb combined. But the positive aspect of these flows is that most of these flows are coming through India focused offshore funds compared to ETF. The money which comes through India focused offshore funds are considered to be long-term money, and that means that the foreign investors or the foreign portfolio managers are looking at India from a long-term investment destination. ETF money coming is largely considered to be a short-term money, given that ETF offer our easy exit route as well as their lower expenses. So out of this, the positive takeaway that I can have is that largely we are looking at the long-term money which is flowing into India, which will give the market much more stability, and that is what we prefer.
Okay, Himanshu, hi, afternoon, Aisha. So what are the prominent sectors in your portfolio that you're looking at making fresh investments in?
Well, interestingly, after a long time, what we are seeing is that FPI or foreign portfolio managers are investing sort of in line with how the domestic investors are investing. So a lot of sectors which are, stands to benefit from economic turnaround, such as financial services or consumer cyclicals, or within consumer cyclicals, auto and auto ancillary. These are the more prominent sectors in their portfolio, the top two sectors. The other sectors are also basic materials where they are increasing exposure. Technology is another sector which is there among the top 5 sectors, but that is where I see them reducing exposure. It's not hard to believe, simply because technology has been facing a lot of rough weather from US in terms of policy as well as Brexit. So there is a bit of uncertainty towards that sector. Even our domestic fund managers have been reducing exposure to technology sector, and the same I am seeing in the way foreign portfolio managers are constructing their portfolio.
Good to hear that. So what, according to you, could be the key triggers or focus areas for FIIs going forward?
The positive thing about these inflows that we have received in the last 2 months is that they are largely driven by expectation. So FIIs will normally try to evaluate government as to whether they are able to deliver on their expectations. India is not the only country, as we can see, is gaining FII flows. Even other emerging markets like South Korea, Taiwan, Indonesia, Malaysia, they are also getting good FII flow. So I think India needs to stand out if they want a larger share of FII money. So I think how India pans out on the macroeconomic front going forward, how the government deliver on its promises on the economic growth and implementation of economic reforms is something that FII will definitely focusing on, because now they would like to invest in India for a long-term perspective, and that is what we are seeing, money coming into long-term assets. And I think this will be the focus area on the macroeconomic front, how the country pans out. Also, how the country stands out in terms of the risk reward profile compared to other emerging markets, which also offer good investment opportunity for FIIs.
Okay, so India must continue with its reform drive. FIIs have to continue investing here. Thanks, Himanshu, for joining us with all the various trends that you've been spotting at the moment.
Absolutely.
And like Himanshu pointed out, the reform drive must continue. If there's one black hole in the Indian economy, it has to be the NPAs. And stressed assets certainly catching the attention of Kotak Bank. Today, the board of Kotak Bank